Lee, COP26 was a catalyst for the consideration of ESG issues. With this in mind, how are you addressing sustainability in your portfolio?
So for the Keystone Positive Change, our ambition is to invest in really innovative businesses that are coming up with solutions towards sustainability challenges. So for us, sustainability is absolutely the center of what we do. In fact, we have a dual objective that every company we invest in must have the potential to generate attractive long-term investment return and also have a positive impact. So we're actively looking for businesses where they are helping to improve the challenges in areas like climate change or healthcare pandemic, as the case of Moderna, or access to information, education, and basic services.
Yeah, and Paul, COP26, clearly a catalyst for all things ESG. How are you addressing sustainability?
Well, ESG considerations more broadly are embedded in our underlying stock selection processes. We have a limited number of exclusions, areas we won't invest, like tobacco, thermal coal, controversial weapons. But in general, we have the view that engagement is more effective than exclusion, and simply withholding capital from certain areas does little in the real world to affect change. So on engagement, we've got a large and dedicated team who engage on our behalf across holdings. We track progress of that engagement with companies in a wide number of areas. Just as an example, during 2020, we engaged with almost 150 companies, which we held across almost 30 countries, raising over 600 issues on labour standards, corporate governance, and so on. We've also allocated capital to specific sustainable strategy on our portfolio, and that invests specifically in companies which rank very highly on sustainability criteria. One example of that, Smurfit Kappa Group, whose whole products are focused on paper-based packaging as a substitute for plastics, thereby reducing the impact on biodiversity, both oceanic and land-based. And as a trust, I think it's very important to point out we have made a commitment to net zero on our portfolio by 2050 at the latest, and we've developed a roadmap in order to achieve that goal. And that board commitment to net zero carbon emissions by 2050 is a very significant step for the company, and it's in line with obviously many governments and an increasing number of companies. And through engagement practices, we'll seek to hold companies to account for their commitments that they've made, and ensure they've got a clear, credible pathway on an interim and long-term basis towards that net zero target.
Thanks very much, Paul. I think it's really important that you've clarified what engagement means and actually given the number and the examples, because that's one of the things that investors always ask us about, what engagement exactly means. Gervais, COP26, clearly a catalyst for ESG issues. How are you addressing sustainability?
What's interesting about sustainability in terms of the UK fund management sector is that we're quite experienced at engaging with businesses. As you know, ever since the Cadbury report, businesses, the UK fund management sector has been quite active in engaging with quoted companies, and that's led to improving safety standards, obviously improved board governance. And I think climate change is just another form of engagement. And I think the UK fund management sector stands ahead of others regarding that. Going forward, of course, it's not just about some of the companies which are already meeting the 1.5 degree climate change, but actually we've got to think about the companies which aren't doing so, but need heavy investment. The financial sector has a big responsibility to find ways to reduce the carbon emissions to do with steel and cement, just as it is with all the other businesses in which we engage in. And I think there will be opportunities, because they will need to invest substantial amounts of capital. They will produce, obviously, improved outcomes in terms of emission standards. But most particularly, I would argue that actually these companies, if they move ahead of others, will be able to take more advantage of the changing market, because customers, and particularly governments, will want to deal with those which are already changing. So I think as a sector, the fund management sector, the UK fund management sectors are probably ahead of most others in this engagement.